The Nasdaq 100 futures are pointing to a rebound, having fallen by 10% in the past three sessions, landing it firmly in correction territory. The six biggest US tech firms have lost more than $1 trillion in market cap over the past 3 days. Tesla closed Tuesday's session down by 21%, and Apple shed 6.7% in one day. Joining me to discuss the outlook for the US tech sector, along with the oil markets as well, where we've seen quite a lot of volatility this week too, is Serge Berger from thesteadytrader.com. Serge, great to chat to you. Let's start with the broader tech index, the Nasdaq 100, or the US Tech 100 as it's called on the IG platform. In terms of this sharp move to the downside that we've seen, is this just a sort of normal shakeout as part of a bull run, or should we be bracing for something a little bit more sinister?
Yeah. Hey, Victoria. Last time we were on together, we were talking about the frenzy that was unfolding itself, and it really ended up crescending just a couple of weeks thereafter, I think at most. And, it really is a combination of an environment where we have there's a lack of a whole lot of alternatives, although there are alternatives increasingly to the tech sector, and then kind of fed by free money being tossed around, and then a lot of people that are just not very well versed in options. It's really which is what triggered the last leg higher in the Nasdaq 100. I personally think that we've seen the highs. I'm about 80% certain, whatever that means, that we've seen the highs for 2020 in the Nasdaq 100. And I think we have lower to go is really the simple answer. How much lower to go? And I don't think it's going to be a straight line necessarily, but I would imagine that the Nasdaq 100 here could maybe bounce a little bit in the short run, but ultimately, and you can see I've got a couple of simple targets on the screen. I would imagine 10,500-ish would be a next target within the sort of a time frame of maybe could be a few days, could be a couple of weeks or so, and ultimately maybe head towards 10,000 at some point over the next 2 months. I know that's a fairly long target, but that's what I would expect as the froth is coming out of the post-split frenzy, particularly on the Teslas and the Apples of the world.
Give us a sense of what's actually driving this change in direction and change in sentiment, because it felt quite dramatic in terms of the turnaround that we saw last Thursday, not necessarily prompted by any one specific factor other than sort of concerns about the global economy, which isn't something really new. How do you explain the recent moves?
The recent move to the upside over the past few weeks, and we saw this quite clearly as we deal with both the retail investor and the institutional investor on the asset management side, was really one where people were just buying upside calls, and we even received news of that or some light on that last week. We heard that SoftBank in Japan was buying a lot of upside calls, and so from a market maker perspective, if you have to sell calls to an investor, you have to hedge yourself. And the way you do that is you buy the stock. So if someone buys calls from you on Apple, you have to buy the stock to cover yourself, because if it gets called away, you're gonna have to give them the stock. So it kind of is a self-reinforcing loop. And when that unfolds, it tends to unfold very quickly. And I might add this as a quick side note: the markets have gotten quicker and quicker over the past few years. If you dial back at your charts and look back over the past few years, the S&P 500 and quite frankly most US global equity indices have had several sharp downturns, and these turns to the downside get quicker and quicker, as do the rebounds. So I think that really is something that's going to stick with us for some time as interest rates remain very low.
Okay, let's dig into some of the individual stories. I mean, Apple was one stock that was on the move yesterday, down by almost 7% in one session. So, a really big move there. I mean, there were a few stories. We had that Goldman Sachs reiterated its sell rating on the stock. And then maybe more of a positive story that it announced the date of its event where it's expected to launch its new iPhones. That's set to be on the 15th of September. What did you make of the moves yesterday? Was it just being dragged down by the broader sector? And where does it go from here?
I think Apple has more consolidation left to do. Um, I personally think that Apple is more or less a proxy to the Nasdaq 100, so we could essentially kind of, you know, replace the word Apple in the previous conversation we just had.
Mm.
Um, but I think for the most part it could and likely will go lower. It's probably not going to be a straight line. What we do know, and it's a bit different this year, but we because of the massive run up, but we do know is after its September announcement of usually when it comes out and announces its new phones or whatever the new thing is, um, you do actually tend to see a continued weakness after that. Now again, it's a bit different this year because of the vertical move, but I wouldn't be surprised if there's a bit of a bid here into that event. And I think you said September 15th is what I heard, and I think I saw that yesterday too.
Yeah, that's the one.
And then after that, maybe some more consolidation again to the downside. So, um, if you look at the weekly charts, this is the weekly chart. You can see this clear, just as purely technical, but a lot of buyer exhaustion. Make this a monthly chart becomes even more pronounced. And if you want to talk about just specific levels here, I think a very simple level to look for as a next support is probably around 108 to 107. And after that, I would not be surprised if you get, below 100 is probably at the path of least resistance through the lens of multiple weeks from now, maybe a couple of months or so.
Okay, and what about Tesla as well? I mean, that was one of the biggest losers yesterday, down by 21%. We've seen the stock shed almost 30%, or even actually slightly more than 30%, I think now, since the recent highs. Obviously, it had that incredible run lately, gaining about 400% from the lows this year. So it has been an incredible outperformer. Is this just sort of coming a bit back down to earth in light of the fact that it was surprisingly excluded from the S&P 500, or is this just sort of a proxy for volatility and one of those stocks that moves in wild swings, kind of exaggerated to the Nasdaq 100 index itself?
Look, over the course of my career, thus far 22 years, I have never seen a stock or a company that has this polarized an investment or even a trading base. Like there's literally no one you see that says they kind of like the stock or they kind of dislike it. It's either it's the
Yeah.
best thing since sliced bread or it's the devil, you know. And when you have that kind of polarized positioning, it is, in my opinion, basically impossible to make this a trading vehicle that actually makes you money over time. From an investment perspective, and I know that's probably not the question here, but from an investment perspective, that's a completely different, completely separate conversation. I think what we saw in Tesla and Apple to some extent as well, is a classic, post-split rally by a lot of folks that are just momentum driven. Of course, the algorithms are helping reinforce that, and just because I think that a stock is lower and they can buy more, of course, it doesn't have anything to do with the company's valuation or anything else for that matter. And I think we will look back at this move in Tesla and potentially Apple, maybe 6 months, maybe a year from now, and say, you know what, that was the top. That was crazy for a period of time. So I do think ultimately this is a name that has to go lower as well. I wouldn't be surprised, honestly, if it gets into the low 200s in the not too distant future. Again, I'm not touching it from a trading perspective because it's just too crazy, but I think there's plenty of froth that could come out of the company. This is not a fundamental call against the company, what it does, although the fundamentals are crazy as well.
Okay, let's switch focus now because oil has had some very major moves recently as well. It's recovering a little bit today, but it comes off the back of 5 consecutive sessions of losses, pushing Brent crude below 40. I mean, there was fundamental news from Saudi Arabia cutting prices on Monday, and that appeared to spook the market. It seems to be mainly a demand story, concerns about the pandemic and what it's likely to mean for global growth. I mean, the aviation industry, for example, has just been completely trashed. Tell us what's going on with oil. We've had this sort of slow run up lately, and now I've sort of had a dramatic move down. Where do you see us going next?
I think oil is at this juncture something we need to look at from the demand side, as you say. What a lot of people
Yeah.
tend to forget is that oil is as much a supply story as it is a demand story. And then, if OPEC does one thing, then that does not much mean to demand. It's a supply story. So, um, what I think right now is important to understand is that we've had a very sharp ricochet off the lows, along with other risk assets on the initial V shape. It's really more like a square root kind of recovery.
Oh yeah.
Um, Right. And so right now, to me, this is more something where I think it's coming back. People are realizing that we're not going to have this V shape, but again, more of a square. So I would think the prices are probably capped in roughly where they were a few months ago. I don't know if I'd necessarily go short here, but I think the path of least resistance is probably somewhat lower rather than higher. Um, I don't think there's a directional trade that I feel comfortable with doing, but I will say that what's really interesting about oil, and this is I pulled up the Brent crude CFD here. What's really interesting, if you look at there's an ETF out there called the XOP, which essentially tracks the price of a lot of the U.S. Oil producers and exploration stocks and those kinds of things. And those companies have been trading a lot worse than the price of oil until recently. It was a big flagging warning that we offered to the clients, and we actually went short the XOP ETF. We closed it yesterday. But I think there continues to be pressure on this market as people realize that we're not going to have a V-shaped recovery, and it's going to be again more of a slower recovery. But at the same time, I think with oil at this point, you also have to be very cognizant of the fact that you could have a supply rhetoric around supply, to your point earlier, maybe from OPEC or something else, which could give you jolts in either direction. So path of least resistance is probably lower, but more the point more is that it's not going to rise a whole lot more from here.
Yeah, so we do obviously have that OPEC meeting later this month. You say it's mainly a demand story, but given that meeting, there could be questions around how supply, particularly as it relates to the cartel, could influence price. We know that they enacted record cuts earlier in the year and then started to taper them last month. Should we expect much from OPEC Plus later this month?
I'm probably the wrong person to ask specifically about OPEC. It's just not my expertise. But I would imagine, given the situation that we have globally, they're going to do their best to be accommodative. But if we start to see better news, like this is one of the things that we're focusing on right now from a longer term portfolios that we manage, is really where do you get rotation into value oriented plays or things that are real economy based, industrial things, anything that has to do with travel and leisure and hospitality. And I would imagine if you were to get some positive news on the vaccine front, or treatment front that surprises people on the upside, I wouldn't be surprised if it doesn't take too much longer after that for OPEC to also say, you know what, we now might be able to get a bit tighter on supply. But in the meantime, I would imagine they're going to do their best to be accommodative.
All right, Serge, great to chat to you today. Bearish Serge Berger there from thestudytrader.com, joining us from Zurich. I'm Victoria Scholar. Thank you so much for watching IGTV, and for more for us, follow us on Twitter. We're at IGTV, and you can subscribe to our YouTube channel, IG UK.